So once again, welcome to our class, and this is our audit class. I wonder if you can see the screen. Let me just share the screen. Please confirm if you can see the screen.
Yes, I can.
All right, so this question focused on audit risk. Number one, students were asked to make some comments on audit risk, and of course what you see in audit questions is the initial question will be theoretic. Then the examiner took us to the identification of audit risk in a scenario, and the responses. These are basically audit procedures that you would undertake to gain evidence to confirm or dismiss your assumed risks, and that is after you could have done your initial risk analysis. Then the examiner took us to internal controls, and they asked us to distinguish between internal control questionnaires and internal control evaluation questionnaires, or internal control evaluation. Supposed to be the E supposed to be before the Q. I think that's what I know. So let me just try to control that. And then general controls and application controls were also discussed. Okay, so let us look through the first question. I was thinking that I'm going to the question. Yes. So the first question says, define and explain audit risk, and then explain how the auditor may reduce audit risk to an acceptable level. Now, this is a theoretic question. Are you still there?
Yes, I am.
Yes, this question is theoretic, and this question does not require you to look at the STEM or the scenario. You can start. You can describe audit risk. All right? So, do you remember audit risk? Here, the students
Yes.
can participate because this is theoretic. Can you please just give us a comment? What do you remember when you hear audit risk?
This is basically a risk that the auditor will express an inappropriate opinion when financial statements are materially misstated.
Yes, very good. So, audit risk is basically a risk, or the risk that the auditor is going to issue a wrong audit opinion, as you have put it. And to just take it a little bit further, the auditor rather gives an opinion that is unmodified when the opinion was supposed to be modified. Okay, or vice versa. So of course that is correct. Now we need also to go a little bit further and perhaps discuss the drivers of audit risk. Do you remember the audit risk equation?
Yes.
Yes, you can tell us.
There's those ones that are within the control of the entity, which are inherent risk and
Yes.
control risk, and then from the auditor's end, detection risk.
All right. Thank you very much. So we do have three drivers of audit risk, and that is inherent risk, and then we have got internal control risk, and then we have got detection risk. So I think you were able to remember detection risk, which is not a bad thing. So I hope you can remember these in your exams if they ask a similar question. So audit risk is a product, or is driven rather by three components. We have got three components under audit risk. There's inherent risk, there is control risk, and there's detection risk. I think that is a fair one. So when we say inherent risk, we are talking about risk that the auditor cannot diversify. We are talking about risk that is driven by the nature of the industry in which your client is found, by the common inherent risks that are associated with the company that you're auditing, that are underlying, of course, operations. And then you are talking about a risk, for instance, that is associated with an accounting balance. Take, for instance, a provision for doubtful debts. We know that that is an estimate, isn't it? So
Yes.
the very fact that you are dealing with an estimate, you have an inherent risk. It's a risk that you cannot diversify away. It is based on the nature, all right, of operations for your client. And then we have got control risk. This is basically the risk that the internal controls of the client will not be effective in terms of helping us auditors to detect risk of material misstatements. Now, an example there could be if you had a key person like a finance director or a finance manager leaving the company, and that person was a key control, okay, when it came to authorization of expenses, when it came to keeping watch on prudent usage of resources. You could say that control risk has increased. Again, we say control risk is outside the control of the auditor. So once again, control risk is the risk that the internal controls of your client will not really help you as an auditor in detecting the risk of material misstatements. And again, you cannot control that. But then finally, we have got what we call detection risk. And this is the risk that the procedures that you adapt as an expert, as an auditor, will not be effective enough to help you to detect, flag out, material misstatements. It is actually a risk that is owned by you, the auditor. So, having discussed these, the question is, in the event, for instance, where you know that you have got high inherent risk and you have got high control risk, and perhaps we can simply say you have assessed that you have got high audit risk from your initial risk analysis. How would you reduce your risk as an expert, as an auditor? You can reduce your risk by reducing your detection risk. That means more work. That means knocking off late. That means using perhaps the best of your resources in terms of workers, in terms of those people who help you on the job. So what we're seeing is inherent and control risk In summary, are beyond auditor's control, but auditor can control detection risk. Why? Because this risk directly, relates to the procedures that you adopt as an expert. So if audit risk is judged to be high, the auditor should extend substantive work. This entails more work on analytical procedures, substantive, procedures. More work, it means that you may have to increase your sample sizes, all right? Because you see, if you reduce your samples, the audit risk will be high. Because if you're using samples that are not representative of populations under examinations in terms of transactions for your client, then we can argue that your audit risk is still high. Okay, so are there any questions on this part of the question? Any questions?
None. It's very clear.
Okay, thank you very much. So we proceed to the next part, which is saying identify and explain 4 audit risks in the audit of the financial statements. Did I say that you're supposed to give us your answers as well? Because I had asked you to do the work. Are you prepared to also
Oh
make
yes,
comments?
I made some comments.
You did some bit of research.
Yes.
Huh? Very good. Nowadays there is what we call AI, which is artificial intelligence. So students should not be finding it very difficult to research. All you need to do is to ask AI the right questions, but don't go with AI in the exams. Don't say Mr. Ngandaro told me to go with AI in the exams. In fact, in the exam room, they do not allow phones, all right? They don't.
Yes.
So I want us to go through the question, and we are going to do some bit of discussion from the question itself. So as we are going through the question, I think it was going to be important for me to discuss something with you. That there's a difference between audit risk and business risk. You understand?
Yes.
When the students are not clear on that, then there is a very high risk that you'll be defending management. Let me just give you this tutorial note, and then we're going to go to the question, read, and then we're going to come back to the discussion. We're going to hear from what you have, and then we're going to go to the discussion points. It is important to understand there is a difference between audit and business risk. So audit risk is the auditor's problem. You understand, right? Audit risk is the auditor's problem.
Yes.
Of course, it is worsened by the fact that you have got inherent risk and you have got control risk. But overall, it is your business. All right? And I wanted to say that audit risk affects your audit opinion. You can't ignore it. Then business risk is a management problem. This is basically the risk that negates attainment of company strategic objectives or indeed goals. But what you see is this, that in almost all cases, all right, the audit risk is hiding in a business risk. So what the managers say is a problem from the operation point of view has got an impact on the financial statements truthfulness. You understand, right? That's got an impact.
Yeah.
That is how you connect them. When the manager says, for instance, I'll just give you a simple example, that we will not be able to operate if the license is suspended or if the license is withdrawn from us. You understand? You're operating, let's say, in the energy sector. You're operating a filling station, and then you are found wanting by, let's say, ERB, and then ERB says, we are revoking, we are getting the license from you. The manager will say, I'm very concerned that perhaps ERB may not have mercy on us in terms of giving us, reinstating our license. But the auditor now, that is, from the manager's point of view, that could be a compliance issue. But from the audit point of view, it becomes a going concern what? Problem. You understand that? It becomes a going concern problem.
Yes.
I hope you are able to see that. So, thank you very much. But let's now discuss the question. I want to I want to look at the question, and then you can give me your views in terms of how many audit risks you were able to identify. So this is question number 3, isn't it? We are told Muchinji PLC is one of your firm's audit clients. So immediately they say PLC, you know, heavy regulation, public listed company. Hello, are you still there with me? Public listed company.
Yes.
These are likely to be under high scrutiny compared to private companies. You are an audit assistant and part of the audit team assigned to conduct the audit of the financial statements of Muchinji PLC for that year ended. Muchinji PLC is a mining company involved in the mining of coal in the generation of electricity. Again, already when you talk about mining, you remember regulation, high levels. The company has material quantities of work in progress and finished products at the period end. Again, this already speaks to us about the issue of stock, the issue of valuing this stock, which is in grades. We are told there is work in progress and then there's finished goods. Finished goods, yes. You are concerned, of course. This is likely to be a material issue within your considerations. Muchinji PLC engages a specialist company to value the inventory at the period end. Again, already you may have to be concerned about the fact that this expert may not even be registered. I'm just using, my just thinking on my feet. But you need to check out this expert. Are they duly qualified to do the work that they do? The bulk of the coal produced is for own use in the generation of electricity, and surplus production is sold on credit to other companies generating electricity. We are told the age analysis at the period end shows an increase in dates to over 3 months. Over 3 months date is not good. Why? Because there is a high risk that you don't even have money in your receivables. You understand that? There's a high risk that perhaps your receivables could have been impaired. You will get to know very soon. Receivables can be impaired. I've heard of people dying rich. Huh? People dying rich because the debtors won't pay. You have heard of that? Huh? So, what are we saying? There's a risk that receivables in this case actually could be overstated. But I want to hear from you. And let me just get back. We are told that in the current year, the company issued about 10,000 kwacha shares at an issue price of 12 kwacha 15 ngwe. What do you have there? I think there's a problem there. The problem that is there is there's a risk that this particular issue could not have been properly accounted for. I know there are 3 accounts involved here, but in most cases, we are good at knowing what hit the bank account. We normally forget the share premium. So we are told again, you have been assigned to carry out risk assessment procedures as part of the planning of the audit of the financial statements of Muchinji. This is the first time that your firm will be auditing Muchinji PLC, except for the fact that the audit manager, the rest of the audit team does not have practical experience in auditing mining companies. Again, first time client issues there. And we are told in gaining an understanding of the entity, you establish that all the company systems are computerized and integrated. Again, the question is, do you have the capacity to meet the needs of this client? So before I go to my discussion points, I want you to make some comments on the risks that you identified and then the responses to those risks. Let's begin. You can make even one comment, even two at most. Let's start with Madam Sonda.
Okay. The fact that they're a new client might pose some audit risk to a greater degree.
Yes.
So there will be need for a lot of procedures to be done so that you can ascertain what your materiality will be, your performance materiality. Essentially, you have to do a lot of understanding of the entity and its environment.
Okay, thank you very much. And yeah, that's one of the things. Thank you. What about others? Mr. Hambros, did you do your part?
Okay, I'm quite behind, sir.
So you didn't do your work. Madam Dorothy? Is Dorothy online?
I think this was given on Saturday, and on Saturday I did attend the class.
Oh, you didn't attend the class?
I guess.
Okay, interesting. Interesting. You should be knocking off early from the Sabbath. What time do you knock off from the Sabbath?
Normally it's
it appears as if you have got the keys for the church. Are you the one holding the keys to the church? I was just kidding. All right. Okay, let's go. Madam Dorothy, did you do any work, or you're like Brother Hambros?
Yeah, on my part, I also didn't do, but
can you think on
looking at
top of your feet? Yes.
the question here and
yes,
some of the notes that I studied,
yes,
according to the risks that I know,
yes,
I can only try to identify them maybe.
yes.
So like maybe as the new client, maybe there can be some inherent risks that exist by nature in the organization. So
yes.
yeah.
All right. Thank you. Yeah. So guys, we need to be doing our part. Thank you very much for that. Submission. So what we're going to do now is we're going to discuss, and hopefully we can understand. I think the first point is the fact that this mining industry is heavily regulated. You have heard of what do you call it? Landslide. I don't know. A mining operation. I don't know if it's a mining cave collapsing on miners. You have heard of that? You have heard of that, where
yes,
people are working and all of a sudden you hear that the earth has collapsed on them. We have heard of all those things, guys. So this is a heavily regulated market and poses risk of underreported obligations. On our end as auditors, we are very concerned that there's a risk here that liabilities have been understated. So you should be very, very concerned if you are auditing a mining firm and it has got no liabilities. Did you hear what I said? Hello? You are auditing
yes.
a mining firm and it has got no, environmental related liabilities. There's a concern there. Okay? So what is your response to this risk? You can heighten professional skepticism. You remember what this means. Professional skepticism is an attitude of the auditor, which includes a questioning mind. Did you hear what I said? You don't have to take everything at face value. You must question what you're being given. So you may also need to review the legal file. There's a possibility there that you might find issues. You may have to speak to the company lawyers. You may have to read, familiarize yourself with industry regulation. I think this is a very basic, one of the most basic requirements. Is that okay? Then we do also have the issue of stock. We remember that stock is in grades. We have got work in progress and finished goods, and that there is an expert that is being used to help us value the stock. To help the company rather value the stock. For the auditor, the risk here is that the value of stock could be misstated. It could either be overstated or indeed understated. Once again, you need to check, all right? Check out the expert that is being used by management. Is that expert recognized by an association? Is that expert experienced? Do they have the skill set to do, what they've been asked to do? You need to, ask for the credentials of the expert. And then next, if it is possible, if you're not satisfied with the expert's work, you can get your own expert. So management has their own expert. You can get another person to help you to check so that you minimize the risk of issuing a wrong audit opinion. I hope you're getting what I'm saying. We also saw that there was increased value in terms of receivables, receivable balance. Here we have got a risk, the risk of understating the allowance, but I think you can also mention other risks. There is a risk of irrecoverable what? Hello guys. The students who said irrecoverable debts got away with some marks. Are we together? Are we together, guys?
Yes.
Yes. So what is your response? Procedures to undertake in order to gain some evidence, and in this case we are trying to either confirm or dismiss this particular risk existence. You can do secularization of receivables or debtors. In secularization, you are simply calling the receivables of your clients to confirm whether they agree being customers, credit customers of your client. All right? Of course, when you read my notes, you see the two types of secularization, positive and negative. But of course, I want you to read more on that. Then we have got analytical procedures. If the figure for receivables has increased, then we also need to see an increase in the figure for sales. And perhaps we may need to see an increase in the figure for cost of sales. All right? There are certain things that we do when we are selling. So there must be an increase in numbers in those activities. Then you can also check the post-year end receipts to see how the receivables are paying. If, for instance, there are no payments coming from receivables recognized at the end of the year after 2 months or so, there is likely to be a concern there. There's a chance that perhaps the receivables may need to be written down, and the receivables could have been overstated. There is actually a chance that we overlook the provisions of IS-10, that is events after the reporting dates. All right. We also saw the issue of shares at a premium. Inappropriate posting is a risk here. You can find out from management how this share issue was treated in the books. And then further, you can also review the trial balance, all right, to see, you can compare the trial balances for current year and previous year to see how the shares which were issued at a premium have affected the current year trial balance. It's very important for you to just be comfortable that the treatment was properly done. Do you have any questions so far? Hello? Do you have any questions?
No questions, sir.
All right, guys. Now let us look at part C. It says describe the difference between internal control questionnaires, and again, this is very theoretic, and internal control evaluation questionnaires. Two types of questionnaires used by auditors. Is there anybody who's going to try to distinguish 4 marks? So the students were supposed to describe and then perhaps give an example of questions that may arise under the 2 types that may be given, are contained within the 2 types of questionnaires. Let's have someone to give it a try. This is now under internal controls. No one is going to represent the village. All right. You know, if you're not going to represent the village, it's not a good idea, because when I go through this stuff, you easily forget because you're not participating. Anybody to try?
I can try.
Yes, please.
So for the internal control questionnaire, from the little I understand, is it's trying to answer a question of how good are the internal control systems,
Yes.
and then the evaluation is just essentially trying to see if there are any possibility of errors or fraud.
All right. Thank you. 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 All right. That is a good try. How good? I like the first one. How good? Then the other one is you're trying to check for errors or fraud. Okay, great. So once we discuss this issue, I think we need to be settled, all right? Because these same questions are likely to appear in your next exam, and it would be very wrong for your brain to tell you to say the lecturer was emphasizing on these things and you were busy deferring the understanding. So please let us listen carefully as we just add on to what our colleague has said. So you should expect closed questions under internal control questionnaire. So this is basically these are checklists, you know. You know what a checklist is, eh? A checklist, you know, a catalog of questions. So under internal control questionnaires, we have got closed questions, but under internal control evaluation questionnaire, we have got open-ended question. All right. So under the first one, the ICQ, we have got a yes or no answer. Are you understanding what I'm trying to say here? Okay. And then under the internal control evaluation questionnaire, you have got the how answer. How answer. I hope you are getting what I'm saying. Now, one of the weaknesses of internal control questionnaires is, unless you ask in the negative, the answer will always be yes. Okay? So if you ask the question, do you always lock the accounts office? Okay, yes or no? The answer will be what? Yes. Do you have a vehicle logbook? The answer will be what? Yes. So the questions only which require a yes will be given a yes, because it's very easy. I think even in cases where the question requires a no, somebody who is intelligent is going to say no. So I think perhaps a combined approach might work. Not all questions must have a yes or no answer. What do you think? And not all questions must have a how answer. So in describing, you can say an ICQ is a checklist of desirable controls in a particular system, whilst an IQ supposed to be internal control evaluation questionnaire, right? Internal control is supposed to be C there, isn't it? All right. So an ICEQ checks if specific areas of fraud could occur rather than establishing whether desirable controls exist. And in this case, you are asking the question, if these errors can occur, how do you prevent them? So there's a question here. Under ICQ, you can ask the question, can anyone access the server room? The answer there is yes or what? Or no? Are you listening? This is a closed-ended question. Are you still there?
Yes.
Yes, this is a closed-ended question. But if somebody says, what controls have been put in place to restrict access to the server room? And somebody will have to explain. You understand that? Somebody will have to what? To start explaining themselves. Somebody will have to explain. And if you put somebody who likes talking, they'll start with company policy. So I think one of the advantages of the first questionnaire type is it takes less time. But I think this other one might take more time. But when you look at disadvantages, again, the ICQ, the first one, it is not very effective in the sense that somebody, if they want to run away from responsibility, they'll give you a yes answer or a no answer. But here you are able to have more insight in that when people begin to explain themselves. So you see now where expert auditors, an expert auditor, when they want more information, if you want more information, can I tell you something? If you want more information, you should use the evaluation questionnaire. Did you hear what I said? Hello?
Yes.
Yes. All right, guys.
So, is it possible to combine the two?
Yes, guys. Is there a question?
I'm saying, is it possible to combine the two?
Yes, I think I said the combined approach could be much more effective. Because I think not all questions must be closed-ended. And not all questions must be open-ended. You understand, right? Yes. So, but as you are asking these closed-ended questions, and you use your experience, you may follow it up. You can follow up a closed-ended question with an open-ended question. You can do that if you're an experienced auditor. I hope you're getting what I'm saying, guys. All right, now let us proceed, and I'm going to finish very soon today so that somebody can go and relax a bit. The last question says, explain by giving examples, of course, the general controls and application controls in a computerized accounting system. And I think this is stemming from, although you could answer it without even looking at the question, but this is stemming from where? This is stemming from integrate. I think there was a point where I read something like integrated. We are told the audit manager suggested that in order to obtain sufficient appropriate evidence, the audit team should make use of CATs, that is computer-assisted audit techniques. This will require that the audit team should assess the effectiveness of the general and application controls in use. Muchinji PLC is concerned about the continuity of activities and on a regular basis saves the programs in use and processed information off-site. This is backup. This is in addition to checking data manually and electronically before running applications such as payroll. The audit manager indicated that if audit risk will be above tolerable levels, the firm will have no option but to resign from the audit unless audit risk can be reduced to acceptable levels. But I think it's from here where we are getting the last question. The last question, once again, speaks to general and application controls. Is there anyone who wanted to make some comment before I bring in the discussion point? What is the difference between general controls and application controls? 4 marks. The students were supposed to describe these controls and then give examples. 1 example at least. There's no one to represent the village? No one? Hello? No one to represent the village? My goodness, this is scary. Okay. Since there's no one to represent the village, are you still there, guys? I had to check. Are you still there? Hello? All right, let's conclude.
Yeah.
I can still share this. I think we are recording. I'll try to see if I can just share this one today, at least in a while. So, you know, when we say general controls, we're looking at those controls that exist outside a given system. And in this case, we're looking at controls surrounding which are found rather within the general IT environment. So these controls are likely to enhance the security of IT infrastructure. Very important point. And then when we talk about application controls, we're talking about controls existing within a particular system or software. All right. These controls are likely to enhance the accuracy and completeness of processed data. Very important points. Now the students can give examples. Under general controls, you have got IT infrastructure controls. You have got business recovery controls. You have got data. You have got data access controls. I think I was not supposed to put a comma there, but you've got data access controls and you've got backup controls. These controls speak to the security of your IT infrastructure. Wireless application controls, these are controls that help you to input, process, and output your data, your processed data rather. Of course, those are reports, but you must make sure that the integrity of the system is guaranteed or assured. So there should be controls when you're inputting data, and that's the reason why there should be access controls. You understand that? Passwords and also limits within a system. People should not be given unlimited, let's say, power to process certain amounts beyond even, their levels. You're talking about, application controls. You want also to, ensure that the data that you process is free from error. The controls that will be, applicable to such are called application controls. And, sometimes we take it for granted. But before you process data, you need to ensure that what you have inputted, the number of documents you have inputted is equal to the number of documents that are showing on the computer there before you process. So you need to, be aware of these. So in summary, we can say general controls are controls without, the system that are operating outside the system. Whereas application controls are system-specific controls. Are there any questions, guys, before we call it quits? Madam Sonda, questions? All right. It appears as if you guys don't have questions. Mr. Ambrose, questions?
No questions, sir.
Madam Doris. All right, guys. It appears as if too much of anything. I think we have looked at I think two major items today. We were looking at audit risk, and as well as audit evidence, just of course as an introduction, and also we looked at internal controls. You can read on those topics. You have the notes. I think I shared some notes again last time. Thank you very much for listening, and do have a good evening.
Thank you, likewise.
Thank you.